Introduction to Money and Finance. Why should we learn about money and finance? Money and financial markets drive trade, investment, and growth. Understanding them helps us make smarter decisions and seize opportunities. SVAllen.com gives traders access to global markets through CFDs, from currencies and indices to commodities, stocks, and crypto. Learning finance builds the foundation to trade responsibly and handle the leveraged risks of CFDs with confidence. Early examples of money and finance. Early Sumerians kept financial transactions that included ownership and rental of land, agricultural labor, and loans. Cowrie shells were once used as a form of money in China. In ancient Rome, temples were the financial hubs of major cities.
The barter system. The barter system is the oldest form of commerce. Bartering is the exchange of goods and services between two or more parties without the use of money. An exchange takes place when all parties agree upon estimated values of the goods or services. The bartering system is still used in some parts of the world. Can you think of reasons why the barter system is no longer widely used?
What is money? Money is anything that can be used as a medium of exchange and accepted as payment for goods and services. Money is used to buy the things we need to live and thrive. Before the paper and coin money we have today, past civilizations used many types of objects as money, including tea, gold, and cattle. These are examples of commodity money because the items have value in themselves as well as value in their use as money.
How is money used? Money can be used in three ways. Medium of exchange. Money is accepted as payment for goods and services. Store of value. Money can be saved for later use. Unit of account. Money gives us a standardized metric that allows us to measure the value of things.
The gold standard. Money used to be backed by gold, meaning each dollar was redeemable for a specific amount of gold. The US Reserve couldn't issue more money than what it had in gold reserves. In the 1970s, the US eliminated the gold standard because the demand for money was higher than the supply of gold. Our current form of currency is considered fiat money, meaning its value is established by the backing of a government. The health of the economy backs the dollar's value. With economic stalls, the dollar can decrease in value through inflation and international exchange rates.
Money. Definition: a system of perceived value, allowing for the exchange of goods and services. Examples: US dollar, euro, Japanese yen, silver and gold coins, and cryptocurrencies. Currency. Definition: a physical form of money issued by a government and used within a particular jurisdiction. Currency can lose value over time. Examples: US dollar, euro, Japanese yen, or other physical forms of money issued by a government.
What is finance? Finance is the management, creation, and study of money and investments. Finance allows us to borrow and lend money, invest, raise capital for a business, and trade on the market. Because of this system, we can fund our projects and activities today by repaying in the future. With finance, we can buy homes, cars, and pay for a vacation, and we can also build a business.
The financial system. The financial system is a network of institutions, markets, and contracts that bring lenders and borrowers together. Lenders, anyone, from corporations to individuals. As the name suggests, they lend money. Most charge interest to make it worth their while. Borrowers, people who borrow money, called loans, from lenders with the intention of paying it back, with interest. Money is borrowed to invest in capital for businesses, purchase property, and to pay for other goods and services. Lenders and borrowers usually come together through banks, bond markets, or stock markets.
Types of finance. Public finance includes tax systems, government spending and policy, budget, and debt. The federal government oversees allocation of resources, distribution of income, and stabilization of the economy. Funding for programs is often provided by taxes. The government also borrows from banks and other governments and earns dividends from its businesses. Corporate finance, the management of assets, liabilities, budgets, and revenues. Businesses acquire financing through investments, loans, and lines of credit. Personal finance, all financial decisions and activities made by an individual or household. This includes spending, budgeting, saving, investing, and loans. Financial planning considers the individual's current earnings, living requirements, goals, and any debts.
Key terms. Asset, something of value, such as cash or property. Cash flow, the movement of money in and out of a household or business. Principal amount, the original amount of money that is borrowed, invested, or lent. Liability, a financial obligation, such as debt. Liquidity, how easily an asset can be converted to cash. Profit, the money left over after expenses. Capital, the money used to build, run, or grow a business. Debt, borrowed money you owe to a person, business, or institution. Typically, the borrower will pay interest on the amount borrowed and is expected to pay it back within a specific time frame. Equity, equity involves ownership. It is often your total assets minus total liabilities. Examples include ownership in a company or the value of your home after subtracting the mortgage balance. Interest, the price you pay to borrow money, or the return earned on an investment. There are two types of interest: 1. Simple interest, interest added to the principal amount one time, and 2. Compound interest, interest that is added periodically and charged on both the principal amount and accrued interest. You can also earn interest on certain accounts, such as a savings account through a bank. Money and finance shape our daily lives, from economic policy to how we spend, save, and invest. Understanding these concepts helps us make informed decisions that shape our future. And today, SVAllen.com lets traders apply that knowledge by accessing global opportunities through responsible, educated trading.